Welcome to Markets Now. I'm Michelle Rourke with Brugler of A&N Economics, and a mixed day in both grain and livestock futures trade. And I do want to start off talking about the corn market because we did end lower today, Alan, and that was after we had that big bullish shock of the 200 million bushel ending stocks drop by USDA on Tuesday. So we ran up into chart resistance. Do you think we will be able to get through it, though?
Yes, we had chart resistance around that 452 and change on the March chart, and I've got some more up around 456. So we're getting into a little harder area to chew through. You did have a nice breakout above the 2/3 speed line at the beginning of the week, and you got a nice move on after the USDA report on Tuesday. So the bottom line is we're at a good stopping place. If you're overbought, you want to leak off a little steam here. But the fundamental trends are pretty good here in that you're seeing some pretty strong ethanol demand. You're seeing, in USDA's view, very, very good exports for the first quarter and into the first part of the second quarter. And you're seeing the funds get out of some of their shorts and probably not interested in getting aggressively short here simply because the ending stocks are tightening.
Yeah, and because of what you just said, because ending stocks now are below a year ago, does that mean the funds might even add to their long position?
Funds are not a homogeneous entity. So there's, you got some that are long oriented, some that are short oriented. I think the net fund position probably goes closer to zero or even goes a little net positive. Depends if we can get a real Santa Claus rally going here. Seasonally, it'd be unlikely to go straight up from here to Christmas. You'd probably have a correction sometime in that time window. But I think the sell-off coming here would likely be short term, and we're looking, from a sort of an intermediate term perspective, buy the dips rather than selling the rips.
So if we get above and close above those technical chart objectives that you talk about in the corn market, how high can we run before you either get farmers selling that caps the rally or you start choking off demand?
Well, I think the key question is, are we going to kill off export demand? Things I like about the export demand right now is, of course, Brazil and Argentina had much smaller production last year. They're not as much of a factor in the export market here in December and probably into January as they were a year ago. So that does continue to give some openings for the U.S. to make export sales. Now, foreign consumers, they are going to bulk at higher prices. Strong dollar isn't helping us in that regard. The window will eventually close if South America has the kind of production that the USDA has got them dialed in for in this WASDE report.
Yeah. And soybeans actually ended a little bit higher, March over the $10 mark. So how much of that might have been just some unwinding of some of these corn soybean spreads? Because we've seen a lot of that action here recently.
I think there's definitely some impact of those spread unwinding. You've also got just a round number. It's a round number support at $10. Our trading range estimates, we haven't, typical trading range in beans is about $3 for the marketing year. Looking back to 1980, we're right in the middle of that range right now. We've bounced off the bottom. We're in the lower third of that range. We bounced off the bottom of the expected range, but we haven't really been able to extend it because meal's still under some pressure. And frankly, bean stocks at 470 million bushels are not tight by any definition. And you got a big South American crop coming on as far as we know today.
Yeah. And so at what point do you see the market maybe not being able to hold around this $10 mark? Is it when we finally get some confirmation that record crop is made in South America?
Yeah, I think you have to get further into the growing season down there. Things look pretty good right now, but you could have, if you got a threat, say January dryness or something of that nature, the market has a little more room to move, potentially even to 1050 or 1075. The other part of that is simply if once their crop is available and they do start harvesting some early beans in January, then that kind of starts to decline on our export sales and shipments. I know that the Chinese have quite a bit of U.S. Bean inventory that was purchased earlier in the fall that's not arriving in China until late December, early January. Then you start to get into what will Trump do on tariffs, and then what will the Chinese do in reaction to whatever the new president does.
And the wheat market closing a little bit higher, extending gains from yesterday, but how much of that is just short covering versus maybe these global ending stocks starting to tighten a bit?
Well, I think you hit the key point there. Global ending stocks, according to the WASDE, are down 17 million tons over 2 years. They didn't do much with that number yesterday. They tightened the U.S. 20 million bushels. But the thing you have to remember is that those WASDE numbers are a marketing year, which for wheat ends May 31st. And what we saw last year is the world tightening came mostly at the end of the marketing year. In other words, that's a May figure, not a December figure. Things are looser now, relatively speaking, than they will be later on. So, the wheat market has to account for that. They have to account for slowing Russian exports. Russia's actually internal prices are fairly soft right now. That's why they were able to raise their export tariffs as much as they did. They're just basically trying to cash in on the gap between their domestic prices and the world trade. The wild card is still going to be Russian exports for a while here. Eventually, we think there'll be some kind of quota, official or unofficial, on those exports, simply because Russians' production is down and their stocks are tightening.
Right. So cattle market had a big up day, new highs for the move, getting live cattle futures above these, I guess it would be the November highs. But we did have some stronger cash, I think up to even 193 in Nebraska. Can we keep going here? Where do we project to, do you think, now?
Well, we do have a few more cattle available in December than we had in November, what we call the ready numbers. But you're seeing pretty strong cash demand here. You've got the holiday demand for turkeys and hams, but you're seeing the choice beef, 311, 312 kind of numbers. Those are pretty good given the seasonality. I think the whole key for cattle is we're still in fairly tight numbers, and if the consumer will pay it and we can bump up the boxes, then the cash will go with it. That's been kind of the pattern for the last year and a half. The packers are running on fairly snug margins, but if they could get more for the beef, they bump up what they pay for the cattle. Chart-wise, I think we're set up for a retest of the all-time highs there, just under $196. And then it's kind of up to the U.S. consumer if they'll pay up for the beef rather than chasing what at the moment is cheaper pork. Then you can probably move those cattle longer term. That is in 2025 over $200.
Wow. Well, it'll be exciting to see if we can go back and retest the contract highs. Meanwhile, the hog market mostly lower here today, so we've been consolidating. The funds were record long coming into the start of this week. So is this profit taking, or is this just some hedge selling?
It's very likely profit taking. Again, you're coming into year end. You tend to start looking at your asset allocations as a fund manager and say, okay, I need to lighten up some of my winners, free up some cash, start looking for some depressed markets to buy for my next round. Because they don't put all their eggs in one basket. They're not all just corn or all just cattle or all just hogs. They're looking for buy low, sell high. So there's probably a little liquidation. We'll know better on Friday night when we get the commitment of traders updates. But, we also have to remember we've got a hogs and pigs report coming out in about 2 weeks.
Appreciate your time as always, Alan Brugler with A&N Economics. That is Markets Now.